Let's go. The chapter number 1 is about the financial management and financial objectives.
Yeah.
See, management is nothing but performing your acts with a proper plan. Am I right? Okay. So people say how you manage your things. That means how you manage your studies, your daily routine activities. What is that management? It's nothing but you do your acts in a planned way. Fine.
Yeah.
And what is a objective? Objective is a aim. And here we are speaking about financial objectives. That's nothing but financial aims. What you have set. So to achieve those financial objectives or financial aim or target or goals, you require the management of finance. Am I right? You require financial management. That's it.
Yeah.
That means if you want to fulfill your goals, if you want to achieve your targets, you need to plan and do the things. Fine. And who does that for the company?
A financial manager.
Am I right? He is the one who is entitled with this job.
Yeah.
Let's move forward. So here we are, the nature and purpose of financial management. See, as you know, in this particular financial management, a financial manager is involved in all this decision making. He is
Okay.
involved in investment decisions, financing decisions, dividend decisions, and risk management. Am I right?
Yeah.
So, see, if you want to start an organization and you're a director of a company, for example, you're a director. Being a director, what would you see? You will definitely have some idea would be generated. That means you want to do something. Okay, that is generation of idea. So you get an idea. Based upon that idea, now you have to do the project screening. Am I right? That
Yeah.
is how much funds is required for that. So the idea is to start a EV vehicle manufacturing. Fine. I'm just coming to the latest thing which is going in the market, where
Yeah.
many of the entrepreneurs, many of the people who want to start a startup are looking forward for EV vehicle manufacturing, which is based on lithium ion batteries. So being a entrepreneur and director of some organization, you want to expand now and you want to start a EV vehicle manufacturing, that is electric vehicle manufacturing. That's the range. So idea is good because it is in the trend right now. Okay, it's like there's a lot of demand of these vehicles in the market in India and some other markets who are dependent on oil. Now the next point comes here is when you get an idea, you start research about that, correct?
Yeah.
You start researching about that. Point number 3, apart from research, it's not only the research. Now you share your ideas with your team members, am I right? And in
Yeah.
that team you have a financial manager even. So now you give the task to your financial manager. See, I have got an idea. I want to start electric vehicle manufacturing. Now you do a feasibility study and tell me what are the resources required, how much investment has to be done for that, how much finances we can arrange for that, and what are the finances, what are the types of finances which can be arranged for that, either it is debt or equity. Then when we start our activity, what see first of all so you will be asking such questions like how much investment is required, from where will you arrange the finances, and from where we, and from and what will be the cheapest source of finance available in the market, whether
Yeah.
it is debt or equity. For every startup it is not easy to get equity. For getting equity you should have a legacy. For example, if Tata wants to come with an electric vehicle manufacturing idea, people will be ready to purchase the Tata shares for that
Yes.
new company. But you being a startup, how many startups you think in the market have raised the money through equity? Barely no startup has done till now, because startups are not allowed to raise equity as per the SEBI's guidelines in India. Fine.
Yeah.
So now recently they have done some kind of amendment, and they are also allowing this Zomato and the likes of Swiggy and all to raise their finances or whatever the funds they require through equity. That's a secondary matter. So whether we have to go with debt or equity, which one is cheaper for the organization, which is easily available for the organization, which is less risky for the organization, all this guy will be seeing forward that one. Then when we start our manufacturing, we will be generating cash flows, and then we'll be looking forward for our profits. So when we get our profits, how much dividends can be given out of that, and how much we need to retain to reinvest in the future, correct?
Yeah.
And then apart from that, what are the risks involved in taking up this project? This is a new adage. I've been taking the classes since many years. So risk management was not written. Recently they have written this one, fine. Recently they added this risk management also, because a financial manager these days, finance and risk are going hand in hand. Okay. Now, so now the task to the manager is given by the director. So this is the director and this is the manager, and to him the task is assigned. Now this guy has to deal with three things. One is to arrange finance for the company. So for that he has to arrange the cheaper source of finance. That means the cost of capital should be less for the company. Okay, when the cost is less, that will help for what? Enhancement in profits. Am I right?
Yeah.
Then he has to see, apart from cheaper source of finance, he has to see easily available finance in the market. So he tried with he tried it his hands with equity, but there are no takers. That means what? I'll tell you what they will do. So these guys, what they do is they outsource these particular finance raising tasks to some investment bank. For example, JP Morgan. So JP Morgan is an investment bank, and these guys will outsource this task to JP Morgan, and they will kind of guide the financial manager of this company that how they will get the finances, what kind of finance is easy for them. So they said that equity you are not going to get because you don't have a legacy of 20 or 30 years. People don't know you. You are new to the market. So how you can get equity? No. So better go for bonds. So that's what they suggest. So we go for bonds now, and bonds are less. These are the cost of capital for bonds is less and easily available in the market. Then third point, bonds are also good. Why? Because the interest what you pay on the bond, you can claim as a deduction, correct?
Okay. Yeah.
That is tax deductible. So these are the benefits what you have from the debt finance. So the financial manager has started his task. He has started seeing for what are the finances which are available in the market. He has assigned the task to JP Morgan to look forward to that. JP Morgan has said that bonds are the only available option to you. Apart from that, you can go for loans, but instead of going for loans, bonds are easy, because you can set some terms and conditions, and like the interest would be less for bonds. Okay, because bonds again are of two types: secured, unsecured. What is secured and unsecured? Any idea?
No, actually.
Okay, bonds. There are bonds which have asset backup, and there are certain bonds which do not have asset backup. So the bonds which have the backup of the asset are secured bonds. Okay.
Yeah.
So the more the secured the bond is, the less the interest company would pay. Why? Why is like that?
Uh,
Because the bonds are very secured and there is less chance of default. So the risk is very less. So the returns can't be high. The returns would also be less. Why? Because since the bonds won't default, there's no chance of the bond getting defaulted. You'll get your money at any cost, and that is sure. If the company doesn't pay money, even if it defaults, even the assets would be sold and you will be getting your money. Fine. So you will be getting your money as a bondholder. So the risk is very less, so returns are also very less. Fine. If the risk is high, for example, I speak about unsecured bonds. Seeing the company's past performances, people people believe the company, and seeing the past performances, people are ready to invest in this company's bonds which are not secured, which do not have any kind of asset backup. Why? Because since the company is a good performer and there is less the directors of the company are the people who are trustworthy people, who are very strong enough, they have a very good management, and never ever since 10 years they have issued n number of times the bonds and never defaulted. There is less risk of default. So henceforth, seeing the track record of the company, people invest their money. So these kind of bonds are unsecured bonds, and in unsecured bonds the risk would be
Hi.
somewhat high than the secured bonds. Correct or wrong?
Yeah.
Why? Because there is no asset backup. See, all the things are in the favor of the company. Company is very good, very genuine, ethical, but we don't know about the scenarios which would change. For example, now the COVID-19 situation, many of the companies are suffering because of COVID-19 situation. It is
Yes.
a very big subject now, the pandemic, which risk managers of the company have to study. So since it is it is more riskier than the secured bonds, to compensate the investors for the amount of risk they are taking, the returns would be given on a higher side. Am I right?
Yeah.
For example, if you go for a treasury bond is United States bond, they'll give you 4% interest. If you go for Apple company's bond, they'll give you 6%. Why? Because Apple is more riskier than United States
Yeah.
government bonds. Correct?
Hmm.
But why?
The
Hello?
interest rate is high.
See, the treasury bonds are United States government issued bonds. Okay?
Okay. Yeah.
And these are having the backup of the assets of the government, the
Yeah.
lands, the various resources, whatever are available in United States of America, the mines, the petroleum, whatever they have. So here, if anything happens, United States government can sell those resources and give back to the public. But
Yeah.
Apple, if it is in losses, then it's a big issue. It's a
Hmm.
private company. I mean, say it's a public company. It's a public company. I'm not saying it's a private company. There are many investors in this company, many shareholders in this company. But when you compare to United States government, do you think Apple is as strong as United States government?
No.
That's what. Because United States government has the entire asset holding of United States.
Yeah.
Apple has the asset holding of some area, some part.
Yeah.
That's what. Now, so things are properly put here. Financial manager has got the first task to arrange finances. We have seen what are the options available. Point number two, investment decisions. So investment decisions is all about the financial manager checking which is a good project. Okay, suppose there are two projects, project A and project B.
Hmm.
So the financial manager who has been assigned the task of investment decision making has to now decide which project would be a more profitable or return generating project. So now he will do that. So there are electric vehicle manufacturing is the final decision what the director has taken. Fine. So
Okay.
now suppose he has, so see, this is a very big concept and very big, it's an ocean. Okay, I'm sharing all my experiences with you right now.
Okay.
So A and B. So investment can be done on a company. Investment can be done for some similar kind of projects. Investment can be done in some geographical area. Anything. Investments can be done anywhere. Okay. So suppose they decide Mumbai and Hyderabad as their destinations to start a electric vehicle manufacturing plant. Fine.
Okay.
So for Mumbai, the investment is 5 lakh rupees. For Hyderabad, the investment is barely 3 lakh rupees. It is not. It doesn't like this. Is not the factor to decide whether which is a good investment option. Mumbai, the cost is very high. Maybe the returns can be high.
Yeah.
Hyderabad, the cost is comparatively less when compared to Mumbai. So maybe the returns may also be less.
Yeah.
Okay. So now the financial manager, okay, let's make the things very simple. Let's not confuse you. Let's forget about the electric vehicle. This is the financial manager. He has been given a task of deciding and coming with a report which is a good project. So he considers two projects. Okay,
Yeah.
suppose now your parents ask me how is Isha kind of performing. So can I say about your performance to your parents without knowing about your past performance?
No.
So if I need to give a convincing answer to your parents, I should get your progress report of 5 years,
True.
and I should do some analysis, and then I can come out with a report that yeah, Isha is a good performer because there's an increasing trend seen in her performance. In
Yeah.
the same way, financial manager takes two projects. He he has some methodologies with him like IRR, the internal rate of return method, which you're going to study afterwards,
Yeah.
the NPV, net present value method, the ARR, average rate of return method, the
Yeah.
IRR, the PI method, profitability index method. Okay, so
Okay.
these are all the methods, and one more is like payback period. I'll write it here. Do you have some idea about all this?
Yeah, they've taught us in the class, so
Yeah. So these are the methods which the financial manager of the company would apply. See, all these methods, it is not compulsory that you have to apply all the methods. Okay. So basically, let's take this method. This is the most preferred and most used method in various organizations. Okay. Because this is the most trustworthy and technically sound method.
yeah.
So what does this method say? So here it is, like he has calculated the NPV of project A, and he has also calculated the NPV of project B. So NPV of project A is positive, NPV of project B is negative. So what do you mean? Which is a good company and which is a good project for the company? Which one they have to prefer?
It's company A.
That's what. So the financial manager has done the decision making based upon his methodologies, what he knows, and this to for deciding which is a better investment, or in the context of investment decision making, NPV method is the most sound and the most technically like sound method and most followed one. And this method will give you an answer whether to go for the project A or project B or not. So here positive NPV shows project A is a good project. We can go ahead and invest our money into project A. Do you know how to do the NPV calculation?
Yeah, like we've done it in the further chapters
Chalo,
actually.
I'll just come out with a small example here.
Yeah.
Okay. So suppose this is project A and this is project B, and your investment in project A is like 2 lakh rupees. So I'll just put it here as negative value. Why? Because this is a cash outflow. Okay.
Outflow.
And here also, let's take the investment is like suppose 2 lakhs. And here, for example, the geographical location is like Chennai, and the geographical location is like, for example, Nagpur. Now, why I'm taking this? Chennai is a port city. There we can manufacture and directly put into the ship and export. Fine. So the
Yeah.
cost will be less here. What is that I told?
The transportation cost will be less.
Transportation cost and various factors are there, whereby this is in the port, more developed, resources are easily available. It's
Maybe.
called Detroit of South. Am I right?
Yeah.
Detroit of Asia. Any there are phrases used for Chennai, and here the cost will be high. So let's assume that the return what we are expecting from project A is, for example, 10%. The returns what we are expecting from project B, let's say, 16%. Why we are expecting 16%? Why? Because the costs are very high. If we
Yeah.
don't get 16%, okay, that will not be satisfactory for us. Correct?
Yeah.
Is it like clear to you?
Yeah. Clear.
अगर हमें कोई चीज सेटिस्फाई करना है, सैटिएबल होना है, तो
Hmm.
फिर उसका रीजन क्या होना चाहिए? अगर कॉस्ट बहुत हाई रहेगा
तो
तो उसको
रिटर्न भी
रिकवर
हाई.
करने के लिए रिटर्न्स भी हाई एस्टिमेट करने पड़ेंगे. करेक्ट?
Yeah.
एंड डू यू हैव एन आइडिया अबाउट टाइम वैल्यू ऑफ मनी?
No, not exactly.
Okay, then how will I explain you discounting and compounding? ठीक है, चलो. Fine. Time value of money. So like, for For example, your mom gave you 1 lakh rupees and asked you to deposit in the bank. You deposited, and this is like time 0. This is time 1. That means here Jan 1st we can take, and this is December 31st. And what do you think? The rate the bank is giving you 10% interest. What do you think is going to be the value of 1 lakh after 1 year?
1,10,000.
Of course, that is understood. So
Yeah.
1,10,000. So now you went to the bank, deposited, and when you came back, your mom asked Isha how rich we are going to become after 1 year. You said, Mom, we are going to have 1,10,000 in our account, and we are going to be richer by 10,000. Fine.
Yeah.
So she asks you like some questions, like this is the present value. Am I right?
Yeah.
This is the future value. Correct.
Yeah.
Fine. And the difference between the future and present is nothing but the interest. That means if you add interest to the present value, you get the future value. You deduct the interest from future value, you get the present value. Correct? Hello?
Yeah.
Yeah, it's understood?
Yeah. Yeah.
So there are certain formulas with which you can find out these values. So the formula is what I'm using here is present value is equal to future value divided by 1 plus r whole power n. And in the same way, future value is equal to present value into 1 plus r whole power n. So see what is happening here. Here you added, am I right?
Yeah.
You have done an addition. When you add, the value increases. And also when you multiply, the value increases, correct?
Yeah.
So this is called compounding. And this is called discounting.
Okay.
See, from future value, if I subtract the interest, I get present value, correct?
Yeah.
So in the same way, if I divide the future value with some factor, I get the present value, correct?
Yeah.
Let's put the things in the formula. 1 lakh into 1 plus 0.10 whole power 1 will definitely give me 1,10,000. That is my future value. And here 1,10,000 is my future value divided by 1 plus 0.10 whole power 1 will give me 1 lakh. Am I getting the same answers? My
Yeah.
present value was how much?
Present value was 1 lakh.
Now it is 1 lakh
Yeah.
still, and my it's going to be the same. And my future value was 1,10,000. Am I getting the future value 1,10,000?
Yeah.
So what is happening here? There are two things you should remember. See, what is important, what you have today is more important than what you have tomorrow. Why? What you hold today is important for you than what you will have in the future, because today what you can buy with 10 rupees, there is no guarantee that after 1 year you can buy the same thing with 10 rupees, correct?
Yeah.
So today this is important than, say today 10 rupees is more important than 10 rupees after 5 years. So what you should do to make this 10 rupees valuable after 5 years, you need to invest. So after 5 years, this 10 rupees will become some 20 rupees, and then what you can buy today at 10 rupees, the same thing after 5 years could be bought at 20, and the same value you will get if you invest this 10 rupees for 5 years. Am I right?
Yeah.
अब जैसे Coca-Cola है, if you take Coca-Cola today, it is available for 10 rupees. After 5 years, the cost will be 20. So how you can get this 20 if you invest this 10 today? Fine. And this 20 will be important for you after 5 years. But after 100 years, is this 20 will this 20 be important for you? No. So that is the reason why people invest. That is the reason why you should understand the time value of money, because the purchasing power of the currency would go down as the time passes. Okay.
Okay.
There are various factors. Let's not jump into that. Slowly, steadily, I'll make you good in the subject. Fine.
Yeah.
So अभी मैं क्या बता रहा हूं आपको? Please try to understand. So here, now what we were discussing, this is simple interest, compound interest, and I use the word called compounding. Correct?
Yeah.
What is the difference between simple interest and compound interest? the rate is 10%. So at the end of first year, how much you are going to get on 1 lakh at the rate of 10%?
1,10,000.
That is going to be 1,10,000.
Yeah.
So 1 lakh plus 10,000. And here 1 lakh plus 10,000 same, you're going to get 1,10,000 after 1 year. Now tell me the second year scenario. What is this going to be?
1,20,000.
1 lakh your principal, the first year's interest and the second year's interest, correct?
Yeah.
But in this case, it's not going to happen like that. It is going to be 1 lakh, 10,000 for the first year interest, second year's interest again 10,000, and again the interest on interest. This interest you got on this, again you're going to earn some interest. Am I right? At the rate of 10%. It's going to be
1,21,000.
that is what, because the amount of the first year has become the principal of the second year. In simple interest, the principal is always the same. So here I can put it into the formula 1,10,000 into 1 plus 0.10 whole power 1. It will become 1,21,000. Just calculate and tell me, are you getting the same answer?
Yeah. Yeah, 1,21,000.
Yeah. So into 1.10 is 1,21,000. So that's the reason why instead of going into all these mechanics, it is very simple. You can just use your formula and find out the present value and future value. So finally, I'm writing the formula here and going back to my NPV example.
Okay.
So future value is equal to present value into 1 plus r whole power n. This is the present value as on today. This is the rate of return which everyone would expect. Okay.
Yeah.
If he invests his money in any of the available investment options, correct? So like suppose I ask you a question, ये R क्या लेना है? क्या लेना है यार?
The rate of return here it's 10% in our example.
Yeah, here it's 10%. But how will you decide R? R can be decided on various like parameters by considering कि आपका cost क्या होगा project के ऊपर और inflation factor क्या हो सकता है. All those things are there. We'll come to that. Okay, अभी तो इतनी जल्दी जरूरत नहीं है, आराम से करेंगे. So this is what n is number of years of compounding. Okay. So now this is called compounding because here we are multiplying. But if I do the division, it would be called as discounting. And why do we do the division and why do we discount?
Because the present value is less compared to
We
the
want to know the present value of that future expected cash flow as on today. Fine. Correct?
Yeah.
जो हमको 5 years के बाद मिलने वाला है, whatever we are going to get after 5 years, of that what is the value today after removing all the returns which are included in those cash flows. Fine.
Yeah.
So वो आज के डेट में कितना हो जाएगा? That will be helping us to decide whether to go for the project or not. Let's go to our example and put this points there and decide which is a good project.
Sorry.
So here we are. So we are expecting that we have put some 2 lakh and 2 lakh here on both the projects. The cost is high here, so I have assumed 16% as my rate of return. Cost is less, I have assumed 10% as my rate of return, and I'm expecting some cash flows for the rest of the 5 years. That means this I have put 2 lakh rupees. I have bought some machine. I've like developed a facility. I've got some labors. All of them we are involved in manufacturing, and we have produced some electric vehicles and sold in the market, and we are generating some cash flows. For example, it's like 20,000, 40,000, 60,000, 80,000, 1 lakh. Let's take this like 10,000, 15,000, like 16,000, 20,000, and then 22,000. So these are the cash flows we have got. Now, what shall we do to find out the NPV? So we would do one thing. We would try to find out the present value of this future cash flow. Am I right?
Yeah.
This is the cash flow. This is on Jan 1st is what I have invested and started the production and everything, and December 31st I generated my cash flow of 20,000. So this 20,000 is the cash flow of December 31st, for which I need to discount and see how much is 20,000 worth today on Jan 1st. Am I right?
Yeah.
Correct?
Yeah.
That's what. So I will do the discounting. So discount factor. So I'm doing it 20,000 divided by 1 plus 0.10 whole power 1. This is the 1 year's compounding. This is like after 2 years. 60,000 divided by 1 plus 0.10 whole power 3. 80,000 divided by 1 plus 0.10 whole power 4. 1 lakh divided by 1 plus 0.10 whole power 5. So I will just write down the factors here. Those factors can also be used here, okay, for doing the discounting for this.
Okay.
So I'm just doing, you can also use your calculator and start doing.
Yeah.
So it is like, see, the factor for the first year is 0.9090. I'm just writing here 20,000 into 0.9090. How did I get this 0.9090?
It's 1 by 1 plus
1
0.
by 1 plus 0.10 whole power 1. Okay. Again, for this whole square. So 40,000 into the factor is 0.826. Third year, 60,000 into the factor is 0.751. 80,000 into the factor is 0.683. 1 lakh into the factor is 0.620. So let's multiply. So this is like 18,180, the first one. Can you do for the second one simultaneously, please?
Yeah. Second one, you're talking about the plan B1 or?
Yeah,
Yeah.
project B. Yes, yes.
Okay. Here also you want me to take the percentage as 16% only, the interest rate, or 10%?
What? Sorry?
In the plan B1, you want to take the interest rate
Oh
as
my god, my god. Okay, 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 okay. Sorry, sorry. We'll take the discounting factor. Sorry, I took a bigger this one, huh? Okay,
yeah.
okay. So first one is like, I'll just write it down.
Yeah.
So the I'm writing the factors. You do the multiplication. 0.8620,
Yeah.
0.7431, 0.6406, 0.5522, 0.4761. Please do the multiplication.
Yeah. Do
And
it.
here I'm doing the totaling. Here I'll get a positive NPV, surely. Two lakh 12,920. So 2,12,920 minus 2 lakhs is what I'm getting here for the project A. And this is a positive NPV project. I would invest my money in A. If you can tell me about B status, we can move forward.
Yeah. So the amounts are 8,620 for first year, 11,147 for the second year,
11,000.
147.
Okay, just I'll do the calculation directly then. 8620 plus 11,467 plus next one.
11,140. 111 11147.
No, see 15,000 into 0.7431 is 11,146 I got. Okay.
Yeah.
147 you mean, am I right?
Yeah.
So 8620 plus 11,147 plus next one.
Next one is 10,250.
10,250. Already my discount factor is very high, so I am going to get a negative NPV. Next.
The next one is 11,044.
Next.
10,474.
70.
No, 74. 74.
10,474.
Yeah.
So the cash flows I got is 51,335.
Yeah,
So,
same.
so I'm getting a negative NPV. Okay. So I'll reject this project. That is what a financial manager would do. He'd come out with his report and submit to the director, and that will convince the director. Yes, fine. Because to convince the director, he has to come out with some concrete thing. Am I right?
Yeah.
So we would go to the other methods afterwards, not required today. We are doing the basics, but just I wanted to explain you something regarding this. I've gone into that. And the next point. So we have discussed about the financing decision. We have discussed about the investment decisions. Now dividend decision. See, the management of the company, the director, and the financial manager have the one task. That means they want to make the organization profitable, as well as they want to maximize shareholders' wealth. Correct?
Yeah.
So, like whatever the profits the company gets at the end of the year after the preparation of financial report, suppose the profit is 1 lakh, the entire profit would not be distributed as dividends to shareholders. But why? Can you answer me?
It's retained for further investment.
Sorry.
It's retained in the company for further investment.
Yes. So they retain definitely some fraction of the money, and
Yeah.
they reinvest like this retained earnings, as well as suppose 80% is retained and 20% is declared as dividends to the shareholders. Okay.
Yeah.
So there are a lot of theories in dividend decisions. We will be studying those theories in details afterwards, like Modigliani Miller theory, traditional theory, dividend relevancy theory, dividend irrelevancy theory. So we'll study afterwards. And what is risk? Can you define risk?
A risk is the uncertainty in the future.
Yeah, that is nothing but something which you don't know what's going to happen in the future. Okay, but you know that is going to happen like that. Okay, see, when we drive fast at a speed of 140, we know accident can happen, but we definitely not confirmed whether it will happen or not. That's the
Yeah.
reason why people say there is a chance that things can go worse. Okay, so you take your precaution and drive slowly. Fine. You cannot alienate yourself from risk. Risk is always there. Fine. So now this risk, what the managers do, they try to minimize this.
Okay.
How they minimize? There are various methods, various ways are there. अब छोटा example लेते हैं. Suppose that we take a car, and like we know that some uncertainty may crop up in future. We may drive fast when we go on outing with our friends, and some some adverse event can happen and we may hit something, and because of that we may get hurt or some other people can get hurt. So we take what to see, we cannot, if something bad happens, it is because of our recklessness, am I right?
Yes.
But the damage what can happen to the car can really be minimized in monetary terms if we take some insurance.
Correct.
That means we are transferring our risk to third party.
Yeah.
Correct.
Hmm.
So in the field of finance we use a word called hedging. So that is not there in your syllabus, you will be studying in AFM. And third point, suppose you have a business, you sell goods to people, various customers, and you sell goods on credit basis, am I right?
Yeah.
So there can be a customer who could default, so you take a credit default swap. Don't worry, credit insurance, okay? यानी अगर वो कस्टमर कल के दिन हमें पैसा नहीं दिया, if it doesn't pay, हम अपना क्रेडिट इंश्योरेंस जो प्रीमियम पे कर रहे हैं वहां से अपना पैसा क्लेम कर सकते हैं फ्रॉम द इंश्योरेंस कंपनी. गॉट माय पॉइंट?
Okay. Yeah.
There are various ways in which we can protect ourselves, and that is called risk management. Or at times people say कि ऐसा काम करो ही मत ना, avoid those tasks whereby you have risk. But you know, without taking risk, there is no thrill in life. Am I right?
Yeah.
Risk is always there, inevitable, cannot be eliminated from our lives, but can be reduced. ये इतना समझ लेना है, and let's move forward. I think I'm able to convey things very properly to you.
Yeah.
What is financial plan? See, if I speak about financial planning and if I ask you something about plan is nothing but thinking before doing something is called planning, correct?
Yeah. Yeah.
And to fulfill your needs, financial needs for your business, you need to do financial planning. That means being a manager of the company, you need to ensure that company has intact working capital adequacy, as well as long term. Company also wants long term funds, and adequately this can also be arranged. That is what you need to ensure, correct?
Yeah.
Why you require working capital, why you have working capital requirements? To run your business on day-to-day basis smoothly,
Yes.
and to meet all your business needs on daily basis. And long-term funds are required to invest, to buy some machinery, plant, building, etc. for your business. Am I right?
Yeah.
Then there comes the control function. Control function is nothing but you should compare your performances with every new performance to see where things have gone wrong, or if things have gone right, how you can even enhance the quality. Okay. With all the three decisions, let's move forward. So these are the decisions what can happen. Decisions internal to the business enterprise, whether to undertake new project, whether to buy a new plant and machinery, put some money in R&D, investing in the marketing and advertising campaign. And there are certain decisions whereby we involve external parties also in that. Their involvement is required, like we want to merge or take over some other company, we want to do a joint venture, we want to disinvest, that means we want to sell off some unprofitable business or sell old plant and machinery which is like a scrap, and we want to sell some subsidiary company. So all these decisions are some decisions which are disinvestment decisions, correct?
Yeah.
So there's a question here, please can you solve this and tell me what's happening here? I'll move forward.
So surplus assets, like until they have a value, they can bring a profit into the business, and that's why they should they should be disposed at time.
Yeah. So when there is a surplus asset, unnecessarily those assets are of no use, for example. So what you can do?
We can sell them off.
That's it, and pay off your liabilities if you have some.
Yeah.
Can you tell me the difference between a management accounting, financial accounting, and financial management? Can you tell me the differences?
Financial accounting is basically like we take the decisions when external sources of finances are involved, and management accounting is the day-to-day like whatever the things go on. I don't know how to explain it properly, but I know one is internal, one is external.
Okay, fine. Let's understand this. See, you are studying ACCA, correct?
Yeah.
Let's say some people are studying CMA. These are management accountants, these are financial accountants. So what these guys do, they prepare the financial report. I'm not saying that these guys don't know to prepare. They also have some idea. Can you excuse me for a second, Isha?
Yeah.
I'll just take some call. Yeah, hello. Yeah, Isha. Hello.
Yes, sir.
Hello.
Hello.
Yeah, Isha, can you hear me?
Yeah, yeah, I can hear you.
So Isha, I was saying ACCA, like they prepare the financial reports and they have a big team with them of some junior accountants. They do the journals, the ledgers, the trial balance, okay? And these guys do the reporting task. And these guys know the accounting standards very properly. They are very good at accounting standards. They apply the standards and make the financial report. These guys, they take these financial reports as a base. That means here, SOFP, SOPL is all they are going to prepare.
Yeah.
Statement of changes in equity. These guys are going to take the financial report as their base and do the analysis part. That means they are going to do the financial statement analysis, comparative analysis, common size analysis. I don't know whether you have an idea about all these or not, but these are the analysis they do. And ratio analysis. I think you have a good idea about ratio
Yeah,
analysis.
ratio analysis, I know.
Yeah. So comparative analysis कुछ भी नहीं है. They take the previous year statement, they compare the statements with the current year statement figures, and they forecast the future. Okay.
Okay.
And for time being, there is also trend analysis. अब ऐसे बहुत analysis है. I cannot come to all details. Not there in your syllabus. So what I mean to say, कि these guys are only concerned with making reports, but these guys take the reports as their base, do the analysis, and they assist the management in decision making process. Okay, because these guys are analyzing and they say management कि क्या सही हुआ है, क्या सही नहीं हुआ है. For example, the company in which this guy is serving as a analyst or management accountant, anything, has seen the statement of the current year and seen the statement of the previous year. He saw previous year these guys, the company has acquired, I mean it's not acquired, has taken the services of Katrina Kaif, some actress of Bollywood, okay, XYZ, and current year, and what has happened is, no, let's take previous year. They did not take service of any celebrity, and they could get a profit of 1 lakh.
Okay.
This year they hired services of this Katrina Kaif, some actress, and this actress services were taken, but the profits were only 30,000. So what do you think? What is their suggestion? Like, scrap the deal with these people. Am I right?
Yeah.
Why? Because it is not working out for the organization. These kind of changes, these guys will assess the management, okay, in taking some crucial decisions, because they study the statements, they compare the statements, and they know everything in and out of the statement, and they can definitely assist the management in decision making कि क्या करना है, सही क्या नहीं करना है, expenses ज़्यादा हुए हैं तो कम कैसे करना है, expenses को minimize कैसे करना है, profits को maximize कैसे करना है, investments कहाँ करना है, everything they'll see. So can I say these guys are management's accountant? That's why they are management accountants. Can I say these guys are management's accountant? Can I say these guys are certified public accountant, CPA in United States of America? Can I say that?
Yeah.
Here you are doing the job for public, the shareholders. Here you are doing the job not for public, but for the company.
Management itself. Yeah.
That's
yeah.
what. That's what. You should understand the differences. Okay. Here, accounting standards should be rigorously followed. No standards at all. Okay.
Yeah.
And these guys only deal with the financial information. These guys can deal with financial as well as non-financial, because decision making and assisting the management in decision making is nothing but a non-financial task. And these guys are also entitled with making some budgets, okay, and some analysis, etc. So these are the differences, prime differences between management accountant and financial accountant.
I actually have a doubt. You said that the management accountants also, they suggest like how to invest in things, right? And the financial manager also plays the same role. So what is the difference between both of them?
That's what. Now today's world, what the thing is, CMA, what I said, can play multiple roles. He can be a financial manager, financial analyst, management accountant, multiple tasks. But you know, in big organization, all the tasks are not given to one person. Am I right?
Yeah. Yeah.
So they assign the task to different people based upon their expertise. See, what we study in the books will not at all match with reality in real life, what we see. Okay.
Yeah.
We study books of laws. They say aisa karo, aisa karo. But what is happening in reality? Who is following the law? The laws are for us, for our poor people, for the middle class. Who is wearing the mask? Are you seeing any politician wearing some mask in Bengal elections?
No.
Zero. What is there? Who will follow those things? Only books. Books में सब लिख दिया गया है. You follow. Some people who won't follow. Reality is different from books. Okay. So where were we? So here you can see the differences, and I think most of the, so these guys follow a format. There is no format for this. So some differences are given, okay? And as per the law, you have to submit your financial statements. No requirement to submit the statements or the analysis report made by the management accountants. It is upon the discretion of the company. If they want to, they'll show. If they don't want, they won't show. That's upon them. They study the past history and forecast the future. No forecasting here. Nothing to do with the past. What is there in the present is more important for these guys. Okay. And if I have to tell you something, financial manager, he is the one who should have the knowledge of everything. So he, अभी company में क्या होता है, एक chartered accountant को financial manager they make. Okay.
Yeah.
So this guy has a knowledge of tax, economics, Okay, financial management, risk management, cost and management accounting, everything he knows. So the people who are very well versed and good, have good command over all this, are made a financial manager. Okay, a combination of economics, statistics, risk management, accounting, finance is all about financial management. Okay, now let's go ahead. Financial objectives and the relationship with corporate strategy. See, corporate, what do you mean by strategy? Strategy is nothing but course of action that can be long term or short term, depending upon the time horizon or objectives what you have. See, corporate objectives are bigger than business objectives. See, business objective kya rahega? Only to make profits or cost cutting, etc. Corporate strategy is something very much elaborated thing. So it is not only about the profitability. This profit is one of the objectives of corporate objectives, not the complete objective. Apart from that, they go for market share, the growth, the cash flow generation or enhancement in cash flows, customer satisfaction, quality management, industrial relations, adding value to their products with research and development. That is what they see. Am I right?
Yeah.
Financial objectives में क्या आएगा? Company का EPS should be high, dividend per share from the shareholders perspective. If the earnings are high, dividends can be paid more. Gearing levels, that means debt and equity comparison, that means debt should always be less than I would not say less than, debt should be maintained at 50% always. That is 1 to 1:1 should be the ideal ratio for debt to equity. If I'm not wrong, you are aware of this.
Yeah.
So if it goes more than 50%, that's a danger for the shareholders. Okay, in fact, for the existing like lenders even. And profit retention, how much we should retain and reinvest, and also about the operating profitability which should be enhanced. Am I right? And the ultimate goal is nothing but to maximize shareholders' wealth.
Yeah.
So how will you know if you're an investor in a company whether the company has maximized your wealth or not? How will you know that? Definitely by seeing the financial position or balance sheet of the company, correct?
Yeah.
When you invested, what was the value of the assets and liabilities, and right now what is the value? Breakup basis, that means when you liquidate the company, what are you going to get? Suppose when you invested, company had a market cap of $1 trillion. Now it has a market cap of $5 trillion. Definitely it is high.
Yeah.
The market values of the shares, you bought the share at $100, now it is $900. Definitely there's a capital appreciation, correct? And they are giving you dividends every year, so that also you can reinvest in the market. Fine.
Yeah.
If you want to know whether what is the gain you have made out of your investment in a company's stock, this is the question which would answer your query. So 2.82 is the market value for share right now after the dividend has been paid, that is X dividend. We should take X dividend as per the ACCA guidelines. Okay.
Yeah.
And this is the market value of the share when you bought the share. So 2.50 is when you bought, 2.82 it is right now. Okay. And apart from this, they paid you dividend. So this is what they are only giving for one. This is the data given for 1 year.
Yeah.
That is Jan 1st and on December 31st, same year.
Yeah.
So like this is the dividend what you got. So 2.82 is what your value of the share is right now. 2.50 is what you invested, and you got the dividend also 0.27. Whole divide by, you earned this particular thing on how much value?
Only by investing 2.50.
Yeah, this is what you have done the investment, and you have earned the returns on this investment.
Yeah.
It comes out around 24%. So this is what your return is. Fine.
Yeah.
So this is what you need to understand. And if at all it is like the dividends are paid for 5 years, you can reinvest those dividends every year, and you can generate more and more returns. So that is what you have to understand. So ईशा आज इतना ही करते हैं क्या?
I'm sorry.
Shall we do till here today?
Yeah, no problem.
Isha, I need to tell you something. I have some videos of this NPV IRR chapter.
Okay.
So if you have some time, shall I send you those videos so that simultaneously parallelly आप वो भी कर सकते हैं?
Okay.
If
No.
you don't mind, if you don't
Yeah.
mind. See, I
Yeah.
will explain you again. I don't have a problem.
Yeah.
If you can go through those videos,
Yeah.
at least we can put our efforts on revision.
Yeah.
That means we could solve some questions in the class.
Yeah. Yeah. No problem. I'll do that.
So I have some 4 or 5 videos of investment decisions, just latest ones only. So
Okay.
I will just put numbering to them and send you on your Skype right now.
Okay. Yeah.
And you can start going through them and follow your textbook. Come out with your doubts if you have any.
Okay.
And this video is recorded, so you can again listen to this video. Fine.
Yeah. Sure. No problem.
Tomorrow I will finish this chapter. Tomorrow, no, day after tomorrow you have the class, na?
Uh, when?
Today, if I have time, I will try to take the class tomorrow 5 to 6. Be ready.
Okay. Yeah.
Fine.
Yeah. Yeah.
See,
You can just text me what time and I'll come according to that.
yeah. See, I have already decided like 3 days in a week I'll take. I'm about to finish one of my CFA batches, so then I'll be free. I can take daily. So
Oh,
as of now, tomorrow I'll try my level best to take your class from 5 to 6. I'll
yeah.
message you. Okay.
Yeah. No problem.
Meanwhile, I'm sending you 4 to 5 videos. Please go through them. That is very essential.
Yeah. So even daily, whenever you take class, like you'll be taking in the evenings only, yeah?
Yes, only in the evenings. Yeah.
Yeah.
See, I'm planning to not take classes in my academy and stop because the COVID cases are surging. Okay.
Okay. Okay.
There's a surge in cases, so I don't want to take any kind of risk.
Yeah.
So if I happen to take in the morning, I'll take that one. No problem. I'll just inform you.
Yeah.
See,
No,
your
because
M9 is my
morning even I
responsibility. I'll
have
take.
my classes, like college classes. That's why I was telling if it could like only be in the evening.
What I didn't get. Sorry, come again.
I have my like college classes.
Uh,
They're in the morning. So I have classes like from 9 to 5.
my God, 9 to 5 online.
Yeah.
You're taking so much classes. My God.
The different subjects is college, so because of that I have classes. So but if anytime like I'm free in the between, you can let me know whenever you're free and you can tell me, so when we'll discuss and we can have the classes then.
Okay, okay. That's not a problem. That's not a problem.
Yeah.
Cool, cool, good. So, Isha, like, please go through this video today.
Yeah.
Okay. Try to grab as much as you can. And this NPV, what I've taught you ना, I'm sending you the videos. वहाँ से आप थोड़ा NPV का grip थोड़ा सा strong कर लो. Okay.
Okay.
If you do that, मैं आपको questions कराऊंगा kids से directly.
Yeah.
Okay.
Yeah.
Okay. No, it's not a compulsion कि I will take the classes once again. आप through जाओ बस.
Okay. Yeah.
Okay. Okay. I'm sending them right now. And tomorrow 5 to 6. Okay.
Okay.
Okay, Isha. And tomorrow if I take, I'll try to wind up the first chapter.
Sure. No problem.
Okay. Bye-bye. Bye.